Okay, we are live. It's been a long while. Can you believe it? It is September. What is going on with the Bay Area real estate market? What is going on with interest rates? What can we expect over the next couple of months? And what are the big headline articles of the month to go over? There's been a lot of movements for especially the city of San Francisco. And so for those that are not aware, there's some interesting opportunities, but there's certainly a lot of problems going on. So we're going to be talking about all of them in this weekly live show that we do every every uh, let's see every month. So let's go over the biggest thing that people are concerned about, which is interest rates. Now, for those that are just kind of getting back into the market, there's been a lot of questions, concerns like where are rates right now? I can't buy a home. It's 7%. Who would want to buy a home? The reality is, for those that have been in the market for some time, the truth is the rates have been in the same band between the sixes and the low sevens for quite frankly almost a year now. And now, while rates have been increasing slightly over the last few weeks, it hasn't been like mind blowing. Now, what is the difference of a rate at 6 versus a rate at 7? The difference between a 6 and a 7 is equivalent to about 10%. So if you can buy a $1 million place and you want to keep the same payments, it's roughly the same as a $910,000 place. So as you can see, people can still buy, people can still make their moves. The question is always on you as an individual. What were your goals to begin with, and how long do you plan to stay in an area? If rates, which most forecasts are, it may decline over the next year, you don't have to be in that frenzy environment. You can always just refinance and lock down that new rate at a lower point. So this is something to be mindful of. Like everybody still has the option to buy, but you got to figure out internally, what can you control? You can control the maximum monthly you're willing and able to spend, whether it's 6,000 a month, 10,000 a month, 15,000 a month, whatever it may be, and just do the math backwards. I can put 10% down, 20% down, which equates to up to X dollar amount, right? So there are many, many solutions and many different ways of people still buying today. And because of that, you're going to see some of these numbers right now, right? Just because rates have been inching its way higher, but it's been the same level for a while, buyers have already been able to assess it and realize, look, my situation isn't changing. Everybody's moving. The people that are moving today are the people that need to make a move, and they actually already delayed that for over a year. Think about it. If you are tired of renting, because rent keeps going up and it's kind of been a waste of money. Number two, maybe you just got married. How many people do you know just got married in the last year? Number three, you just had a kid. How many people do you know have a newborn kid? Number four, your kid is now 4 or 5 years old. How many people do you know now schools matter? Right? Like these things have not changed for everybody. Now they have been delayed for a year, but now that you see it, like the rates are still in the similar range as a year ago. Inflation is still there, but it's not nearly as unknown or rampant. Stocks have fortunately rebounded tremendously, but you can see what happened with prices. The numbers right now are even higher than some of the times in spring. And we all know many times spring has potentially some of the higher prices, but not anymore, right? Rates are higher now than spring, yet prices are still higher. Why is that? Like, what's going on? Like, the thing is, at the end of the day, it's all about supply and demand of a local economy. Think about all the drivers back to the Bay Area, all the companies return to office. That is a real thing. Most companies already have this policy in place, at least 3 days a week. Think about what happened last year. Last year, they didn't have these policies in place. So you have this big driver here. Number two, you have a lot of companies that have raised a lot of money again, especially those in AI, and they need to hire a lot of people. So that certainly helps drive up rent, which also helps people say, look, why am I paying these kind of rents? Let me just buy a place instead, right? And so these things have been going on. And so that's why you see, even though the supply is down by a good amount, the buyer side is down by a good amount. It's still somewhat balanced. Arguably, you still have more buyers than sellers. And so that's why you see prices continue to rise and things still move very quickly. Just go to any open house. Heck, go to my 2 open houses this weekend. I have 2 new listings, and you can see like there's tons of people still actively looking and wanting to buy because now that its rates are high, but there's nothing you can do about it. Yet people can still buy. It's not like nobody can buy anymore. So that's the key, understanding like if you plan to be in the area for a while, which is a couple of years, and you're confident with your job situation, which many are, then people are still making the move and settling down, especially most of your future opportunities are probably in this area. So this is the pricing charts, right? You can see August has been very good. It's not higher than it was in June, but it's still been pretty stable, pretty consistent. There hasn't been like a drop. Let's take a look at the number of new listings, though. This will actually give you some hope, and I'll tell you why this is actually happening. So if you take a look at new listings, so look at the number. Look at what happened in August. Usually the busiest activity is the springtime, is it not? But look at how many new listings came up in August. 1407. This is the most it has been all year, even more than last year. So for those that keep saying there is no inventory, stop it. Stop that. Stop that nonsense. There is more homes than last year, right? There is more homes than you have seen in spring. So why is that happening? And then if you're not finding much success, why is that happening too? Those are two different matters we're going to discuss right now. Number one, why is there more sellers all of a sudden? Rates are higher. Why are there more sellers? Because the truth is it goes both ways. The buyers have reassessed, so they've been back on the market. Number one, so the buyers are back out. Number two, even though the rates are higher now than it was in the last few months, the prices have done well. So in the past, it was very difficult, right? It's actually a very bad time for sellers when they have to sell when rates were higher and the prices are down. But if the equity is now good again, which it is, clearly, they can move on still, and they will move on, right? So as long as the prices remain good, the sellers are like, all right, I'm ready to move out still. I delayed my move by a year, but I'm willing to move out because the price is still good. I still can put that amount in my pocket. And so that's why you see that kind of volume. I mean, look at this. Look at how much more listings occurred in this month. Like, it's significant. How can you not say significant? What kind of excuse can you have on this point? Now, for you searching for a place and you're like, why can I not find anything? There are a few reasons for that too. Number one, the velocity of things has not changed. Take a look at this. Days to sell median. Look at the numbers, right? They've been consistent now. The median days to sell is 8 days, which is a 1 week turnover. It typically doesn't get more than a week unless it's like this weekend, which there's not many listings this weekend anyways because it's a long weekend, but also there may be people on the holidays. So that's one component. But all good homes will sell within a week. And because all good homes sell within a week, then that's the decision. Then things rotate every week. So you can't be like, oh, I'm just going to look here and there occasionally. I'm going to look once a month and I'm going to then complain there's no inventory. No, because the homes cycle every week. Nothing wrong with that. It's been this way for a long, long, long time. So that's how it is. So if it cycles every week, you do got to look like today, Friday. You do got to look Thursday. But that's all you need to look. Thursday, Friday is good enough. That's your batch for the week to go look at places. But you can't be looking at every other week. That's not good, right? You got to make the adjustments to change. But you don't have to look daily too. That's also a waste of time. Looking 7 days a week is virtually no different than looking 1 day a week, Thursday, Friday. It's better to be consistent Thursday, Friday every week than it is to just go crazy for 1 week and then be exhausted and be like, why am I not seeing more houses? I'm refreshing my app. Why is there no more houses? This is not how it works. This is not like eBay and you have random things come up. So that's something you just have to be mindful of. That's a big part of it. Now, the other thing, number two, as I shared before, prices have been about the same, but the key is, are you looking in the right places, right? Take a look at this. Next stat, the sales to list price ratio. You can see in general on median, 104%, which is like 4 or 5% higher than what they listed at. But wait a second, Spencer. You just showed me that other chart. It's not raising by 4 or 5% every month. Like, home prices are not increasing 20% in 4 months. If you follow this, you may assume that in 4 months, they increase by 20%. If I'm following this logic, no. Sellers can list it whatever they want. They can list the same home that everything else sold in the area for $1 million. They can list that for 1.1. They can list that for 900,000. It's not worth 900,000 and it's not worth 1.1. It's worth $1 million. but that was out of your control. So the key for everybody to understand this is like, okay, look at what has sold in the last 2 months in areas that you're considering. Just go sold. You can go on Zillow. You can go on Redfin. You can work with me. I can do this very easily. Within 2 minutes, you will know exactly where you should be looking. But just look at sold and see how much it's sold for. Look at the condition, right? Look at the condition of those homes and look at the size of that home. Look at the location. Is it next to anything busy? Is it next to a highway? Is it next to a busy road? Is it next to, is there some positives of it? Does it have a view, right? These are the plus and minus that you can adjust. And then from there, you'll be able to determine, okay, as long as I can find something in this area for that size and that condition, it'll go for that. And then you'll be successful. But don't be like, oh, this was listed for $900,000. This is a $900,000 home. No. That's not how it works, right? That's just a waste of time. And you're just defeating yourself before you even start, right? But looking at this information, all of you can easily see that and understand, like, that's how the game works. Like, most listing agents, including myself, we're going to list it low on purpose. There is no downside. It's going to end up virtually the same, but we'd rather get more traction, right? We want more people in. We want more potential for the overbidding. You have a higher chance of overbidding if there's more people in. But at the same time, fortunately, for the most part, it's still ending up to be the same. So that's the key to be mindful of, right? So the key is, are you looking in the right areas? If you're struggling and not seeing a lot, you just saw yourself. We have the most amount of homes in this month than in the last 12 months, even more than springtime. So there is no more excuse if you have not seen a ton of homes this month, right? Like, this is the most it has been. So those are the things to be mindful of. Those are the things how you want to reevaluate the search. All right. If you have any questions, of course, I'm happy to go through this game plan with you. I can do a live screen share within 5 minutes. You will know exactly what you should be focusing on. You'll know exactly the velocity of the turnover of the homes that can work for you. And then you'll be underway because you'll have a much better game plan and understanding of the places that work. Now, we're going to shift this slightly. I'm going to be sharing a video because of Dreamforce is coming around, right? Well, let's take a look at this.
The massive Dreamforce conference in San Francisco all depends on its upcoming convention next month. KTVU's Christian Captain live tonight at Moscone Center, where a Google Cloud conference is currently underway. And Christian, I mean, Dreamforce, it's always a huge financial boost for the city, especially now post-pandemic.
Yeah, absolutely. And as you know, Dreamforce regularly draws tens of thousands of visitors to San Francisco. But now the head of Salesforce has made some comments that have thrown the future of the Dreamforce convention into question. San Francisco's Moscone Center is buzzing with activity, with conventioneers attending the 3-day Google Cloud Next conference. In 2 weeks, it'll be Dreamforce. The annual Salesforce conference is expected to draw 40,000 visitors to San Francisco. Now, Salesforce CEO Mark Benioff has gone on the record with the San Francisco Chronicle saying, quote, "If this Dreamforce is impacted by the current situation with homelessness and drug use, it may be the last Dreamforce." His comments coming amid a discussion about Salesforce's $1 million donation to the Salvation Army's Way Out program, aimed at helping the homeless. Now, SF Travel is responding to Benioff's comments, saying the city is working hard to make sure that Dreamforce and other major conventions go well.
This fall, in fact, is going to be a very busy conference year for San Francisco. So we're going to see a lot of conferences come from starting now all the way through December. And our focus and our goal together with the city and the hospitality industry is to make sure that San Francisco shines.
Sources who've been working closely with Salesforce confirmed that talks have already been underway between the tech company, San Francisco police, and city officials to address any security concerns long before the conference begins. San Francisco's Mayor London Breed also weighing in, releasing a statement saying the city is already working hard with Salesforce and the city's hospitality industry to plan for the conference and make sure it goes smoothly. The mayor pointing out that, quote, "After last year's event, Mark Benioff posted about what an amazing experience it was, how the city looked beautiful, and that there were no safety issues." Benioff himself tweeted a message immediately following Dreamforce 2022, saying visitors commented on the beauty of the city and saying there were 0 safety incidents reported, something SF Travel noted as well.
Absolutely. And it was a really well-attended conference, and it really came off without a hitch. We want to make sure that Dreamforce in 2023 is the same, if not even better.
Current conference attendees report a smooth trip so far. Brianna Blanton is visiting from Arizona and says the city doesn't meet the reputation portrayed in some media.
I've heard that it's dangerous, honestly, and not to drive a car here, that there's like a bunch of homeless people everywhere, but I haven't really experienced that very much. We love the weather. The weather is so nice. It's really nice, like being here and being around everyone, and I don't feel unsafe yet.
Alex Silva says he feels the same.
I see as I walk around, there's a lot of police officers everywhere. So I think they're doing a really good job. They're trying to kind of catch corral and keep some separation and all that stuff. So
And keeping safe.
keep things safe. Exactly. I don't feel unsafe walking around.
We have reached out to Salesforce for a follow-up or clarifying statement.
What do you guys think about that? Is this the last year potentially of Dreamforce, which is a huge driver of the local economy, especially in San Francisco, right? So it will be interesting to see. I mean, like I just toured some homes in San Francisco yesterday with a client that's relocating potentially from New York, and the stigma is tremendous. Like there is so much crime going on in San Francisco and Oakland. You're like, holy cow, like what is going on with this entire place? And make no mistake, I'm going to say both sides. On one end, that is true. There's a lot of areas that are just not good. It is disgusting and it is bad. And they need to get their act together and do what is needed to just fix that, because it's a bad press. That being said, San Francisco is a huge city. Like, do you think really there's that kind of thing going on for all of the city? The answer is heck no. Let's just be realistic. Let's just take your political stance out of the picture here. There's still a lot of very nice areas, and especially when you have a big convention like this. Now, the interesting part is Moscone Center is in a very interesting location, though, for all of you that are in the city. But then again, it's a highly trafficked place, so there's a lot of hotels there, a lot of things nearby. So, in the next 2 weeks, it's going to be really interesting to see. Like Benioff has specifically mentioned that, because you can't bring all these people, especially for Dreamforce, which is basically like their largest like sales conference and their partnership conference like that they have. They can't have problems. Let's just say that. So if the city cannot get that clear message and do everything they can to make it seem like this bubble, make it like a Disney bubble, then this may be the end of that. And Dreamforce is the biggest convention by far of the year. I'm sure they're bigger than like GDC, which comes on every year here. You saw Google Next. That's way small. That's Google Next is very small relative to Dreamforce. So we'll see. In the past, every year I used to go, the marketing dollars for those restaurants because of last year was not good. Not because of SF or anything like that, but because the tech sector, think about same time last year, tech sector was terrible last year this time. So it was kind of interesting to see. But hopefully nothing goes bad there. It'd be an absolute disaster if Dreamforce leaves. Like, you do not want to see Dreamforce go to SoCal and like LA. You definitely do not want to see them go to Florida with all the other conventions. So hopefully things go well and they keep coming back, and there's other big conventions that continue to come back. Now, the reason I bring that up is because that stuff is always in the news. It's been in the news a lot this last month, to be fair. There is a lot of things going on, and I want to kind of go over some of these, and I also want to go over my comments with some of these too. Because when everything seems like it's going bad, does it really mean it's that bad? Does it mean things may occur? Does it mean there's opportunity? Kind of both, depending on what you see. So take a look at this. At the end of the day, deals are still being done. Real estate shakeup. Buyer found for nearly $1 billion in mortgages tied to SF's largest landlord. A buyer has been selected for the huge $940 million mortgage portfolio tied to 2,000 San Francisco apartments. That is crazy. The city's largest residential landlord. Ballast Investments is poised to take over ownership of 75 apartment buildings, become one of the city's biggest real estate players. So what happens in this case is you have your existing owners that now have higher rates. They may have to cash out. They may have other projects. They may have other distress in other areas. But you have a lot of different funds that have been created to take advantage of some of these opportunities as long as they feel like they can get a deal. And so sometimes you have these things continue to happen, right? You can see these things are still going on. Veritas affiliate bought 42 apartments on Russian Hill, right? So like you can see like lots of these moves are still happening throughout the city. So while some people have given up, others are taking this as an opportunity to continue to develop. Take a look at this one. Real estate developer bets big on San Francisco downtown. San Francisco downtown, straight up worst vacancy in all of the U.S. Straight up just terrible news. But still, some people say, look, that may be an opportunity to make a bet. Principal firm at Presidio Bay Ventures just acquired 60 Spear in downtown San Francisco for $40 million. Has previously been assessed for 121, a third the amount. Right? Most get discounts now because most of these are empty. So that they're empty, those are actually a better opportunity than those that you have actually some tenants. Why is that? If it's completely empty, you can do lots of different things to it. You can renovate it. You can try to convert it. There's a lot of things going on. That's why a little tip, not necessarily in San Francisco, but a lot of places, let's say in the South Bay or the Peninsula, you see like these commercial spots, like old retail centers, and they straight up literally just let it go to nothing. Don't care about tenants. Don't worry about anything. I want you to leave. And so they do that because it's way more valuable now as something that can be potentially changed to something else. But if you had a 2 tenants in like a 20 unit place, it's actually far worse because you can't even do anything with that building, yet you're getting so far below rent. So it works from that way too, right? There's strategies. It's better to go straight up empty than it is to have like a few stragglers. And so that's why you see that. But that doesn't work for all cases, right? Take a look at this. SF hotel investor makes big bet with this is another one, but I'm going to go over something later on. But SF hotel investor makes big bet with 3 reopenings in Soma. So Soma, next to the financial district too, has also gone through significant challenges. But you can see some companies are saying, look, we're going to be reopening. We're going to renovate this whole thing. This is the time to enter. We're going to revitalize. We're going to be very proactive. And so you can still see a lot of these bets continue to take fold. Now, it doesn't work only that way, right? There are also the reverse side happens. If they cannot find a buyer, this is where it gets messy, right? And this happened earlier in the month. Owner gives up 2 big brand San Francisco hotels. They say it's going to take a long time to get better. Park Hotel and Resorts gave up 2 of the biggest ones. One was the Hilton, and the other was the Hyatt. Or actually, sorry, the Hyatt is still there. It's the Hilton and another one. I think it was Park or something like that. So you can see like those big ones. They're like, you know what? I don't even want to deal with this anymore. Here, lender, take it back. Here's the loan. You operate it now, and you go find someone else. And then those lenders will be like, all right, anyone want to buy a hotel? Anyone want to pull money together and buy a place and operate it? And so you'll see these happening. You'll also see cancellation in projects. Construction suspended on $1.2 billion tower, one of SF's only big building project. Who would want to build anything right now? I mean, the building has so much risk, right? You have an oversupply of commercial, oversupply of condos. Like, who would even think about building anything right now in San Francisco? It makes no sense. So you're going to see that happening, and that's going to be that. I mean, there's not that many projects happening of that anyways, but don't be surprised that they're just going to halt and then wait a year, see what happens. Does things get better? Do things change? Is there some things turning the reverse side? Now, that was San Francisco. So a lot of news in San Francisco, as you can see, for the month. Now, at the same time, there are some moves in, let's say, the South Bay that are happening. Google return to office crackdown reportedly includes a $99 hotel for workers. I made a short and a reel about this, very, very popular. This is an option for staff until September 30, 2023. So that's another month. Has anyone taken advantage of this? If you have, please leave in the comments below. What do you think? Why did you do it? Number 2, what do you get out of it? Because if you do the math, $99 a night isn't too bad, especially you're coming in 3 days a week. And if you're maybe living somewhere else, like maybe you're in Sacramento or something, you do that for 3 days a week. That's not too bad. Now, driving back and forth from Sacramento is like, there are people that do that, but that'll be crazy. So you may as well go with those kind of options. So it's a pretty good program that they have. Now, I'm curious, what was the thought process of this? And maybe some people have actually relocated from another area, take advantage of that short term, get a long-term lease as a rental, or buy a place and stop renting altogether. So there are some people that ultimately do that too. So very interesting to see. They're just trying to pull all the different things to get people back in the office, and it's good to be back in the office. Especially at Google, you have unlimited food. You got lots of perks and amenities. Why not do that? Especially you're barely in your place anyways. Now, at the same time, Google looks to offload another big office campus in Silicon Valley, Palo Alto office. How many of you even knew that Google had Palo Alto offices? I wasn't even aware of it. 182,000 square feet. If anyone was there, I'd be curious to hear like what was going on in this location. I mean, they have huge hubs in Mountain View, Sunnyvale. They were trying to potentially build a San Jose one. That's at halt. They still got a huge Mountain View campus that they're planning to also build that they still haven't done anything with. They'll probably halt that. So it makes sense some of these like secondary, tertiary ones that they can just remove and get rid of, especially it's a little bit further from like their main hub. So don't be surprised if like these satellite ones continue to be impacted that way. And this will happen all across the states. So this is why it's so important to be close to the mothership. The mothership will be fine for all of these. They're not leaving that mothership. But these places that are a little bit like satellite offices, they should and they will continue to remove these. And last but not least, here's some really interesting one. Now, for some of you guys that may have followed this, there was a lot of interesting news. Initially, they thought it was all by these Chinese spies. That was like the theory before of Travis Air Force Base, because there was developers or people buying a ton of property or a ton of land around Solano County, which is by Travis Air Force Base, which is by, interesting enough, there is this thought process of that corridor of the Bay Area and Sacramento. There's always been a lot of talk about that. And the question is, can there be anything done of that? But the corridor is very interesting, right? If you had a lot of people that moved to Sacramento over the recent years, the Bay Area getting too expensive for some people, what if that middle ground can be done with something? That's the logic from this, right? This is why there's a lot of big tech investors for this, big investors, period, that are like, look, let's create this like whole new area. And so that's why they gobble up a lot. Because think about it, that area is like cheap. That is just farmland. And it's like relatively flat, but it's just, there's not too much going on there. And so a lot of these investors, look at this. For the first time publicly identified investors, Mark Andreessen, Patrick and John Collison, Chris Dixon, John Doerr, these are the who is who of the VC world, right? And they're trying to like figure this out. Like, can we actually build this city, expand it there, create it, planned? It'll be one of the newest planned areas that can be. I mean, look at what happened with Mountain House. Our Mountain House all is a newer area. It's much further out, but this is actually in an interesting core of things. So it'll be interesting to see, and it's cool to see these projects. Like, these are all now physical projects, right? The Bay Area for a lot has been all digital, but it's cool to see these physical projects. And time will tell how successful they are, but it will be great to see progress of that. And so you should definitely take a look at this. Now, make no mistake, this is a long, long project. You'll be very glad if it takes over a decade to do. But regardless, it'd be good if maybe they can get some subsidies. Maybe the state can do something. I mean, these guys have plenty of money too, so they can probably raise and make some ideas. I'm not sure what they can do. I mean, I guess if you partner with a developer, you buy the land for not that much, and then you resell it because now it can be as dense housing, could be apartment buildings and things like that. So there is definitely a return, a ROI, return of investment and capital on it, but it obviously will take a long time. So, but it's cool to see, and it's these are always very exciting. There's a lot of other places. That. All right. Sorry for the hiccup. I appreciate you tuning in as always. If you want to go over some options, send me a call, give me a text, send me an email, and I'd love to be a resource for you to go over your home buying or selling plans in the Bay Area. Enjoy the long weekend, and can you believe it? It's already September. See you next time. Bye now.